folks, welcome back to Pete's Investing. It's February 27, 2024. This is the silver price analysis along with some ETFs to consider as well. Now we've also got the overall trend is bearish on all time frames, and there has been a divergence hit recently, and I'll cover that as well. But also we've introduced a new indicator which helps identify tops and bottoms, and I'll include a trading idea for you should you wish to pursue that. First off, the silver commodity price. We've got the weekly, daily and hourly, and on all time frames the ADX 25 down here is showing a bearish trend on the daily and the hourly as well. On the CCI 150 there is no divergence currently for the weekly, none for the daily, but on the hourly you can see there was a bullish divergence back here versus lower lows on the price. Now also note we're including these red and blue arrows, and they help identify in most cases tops and bottoms. So you can see there's a lot of resistance up there along with that resistance line, and these showing red arrows to the downside on the weekly. On the daily we've got currently a few blue arrows indicating potential support and a bounce from there, and on the hourly you can see them more clearly. We've had a lot of reversals up here on these red arrows and reversals likewise to the upside on the blue arrows. What I like to use these primarily as well as a potential trading idea. We could also apply them in conjunction with the divergence. You can see there both of those bullish divergence identified a blue arrow indicating an upswing, and they both executed nicely. That one you would have probably liked to have taken heed of that red arrow there and gotten out of the trade, and that coincided with our target area there. This one, had you let it ride, would have you would have gotten out of the trade somewhere up in that area there. So that's one little trading idea in terms of how to use these reversal arrows. Next on the list we've got SLV, it Shares Silver Trust. This is also showing a bearish signal on the weekly, almost about to break to a bearish side on the daily, and bearish on the hourly. On the CCI 150, no divergence yet to talk of. Likewise on the daily. And on the hourly, we also had a somewhat a double bottom here with versus a bearish low divergence on the price chart, and that bounced as well. And you can see those bullish arrows identifying a reversal. And lastly, we've got the First Majestic Silver Corp, ticker is AG. Bearish on the weekly, bearish on the daily, and bearish on the hourly. The CCI 150 is showing a bullish divergence currently. You can see there are lower lows on the price versus higher lows on the CCI, and that's actually bounced, and it may have already completed, and that was also indicated by those bullish arrows to the upside. On the daily, again we had a bullish divergence there versus the price. It bounced, that was your reversal area along with that resistance, and it bounced to the downside, and now we're currently looking at more potential reversal to the upside in a conjunction with those blue arrows. Now just bear in mind these aren't 100% guaranteed to reverse at those points, because you can see here, for example, on that little, we just remove that Fibonacci, it had a cluster of blue arrows there indicating an upswing. It came up slightly, but then it continued further to the downside, and then it showed more blue arrows. And again, a bit of consolidation there before falling even further. So they're not always a full-scale reversal. Sometimes they're just little upswings to the upside. In terms of a trading idea, we do have trading on the chart at the 1 hour time frame using the Heikin-Ashi candle. So whenever the Heikin-Ashis turn green, we go long, and whenever they turn red, they go short, and Heikin-Ashi can be found on most charting software packages. So looking at the silver commodity price as an example, what we have with the daily, and we've got two back tests here. One is the average down on the hourly time frame, and this is a stop loss program on the hourly time frame. So you only trade the hourly based on the direction of the daily. So here, for example, we see there it breaks below the moving averages on the CCI down here. When it breaks below that, on that candle, you start going short. And you'll notice I've put the back test to start at that point there when that point breaks on the daily, and it enters one short position and closes out with $500 return on that one trade. Same goes for the stop loss strategy. And again, I'll put the rules for each of these at the end of the video, so stay tuned for that. Another example here where the CCI breaks above the moving averages on the daily. You'll notice there we entered long, and I'll put the back test to start at that point to demonstrate the result. So it started trading there, got a few trades happening there. and that goes right through. Now you would have stopped it when that CCI breaks below those moving averages. So you would have stopped on both. You can see the vertical lines on both of those. You would have stopped trading that long during that position. Now you don't take any long or short positions while the CCI is in this range, and that's to avoid false breaks. For example, here you can see it broke above the moving average to potentially go long, but then a false break and it broke back down to the downside with that big bearish candle. So you wait for it to break above those moving averages like it did here to go long. In that point you would have gone short at that point, and you would have closed and stopped the short positions there. Now in this case, again, you would have stopped the long positions on those vertical lines on the two right charts you can see there, those grey areas. You would have stopped trading those once those trades completed. So the average down trades, you would have stopped there once that trade closed. Likewise there. Now in this case they both did quite nicely. The average down approach generated $4,300, and the stop loss strategy generated $890. So a big difference in terms of profitability between the two so far. So one more demonstration of going short. So I've put the so when the CCI breaks below the moving average there, on that red candle there, going short. Let me just reduce that. You see there's a few contracts entered there, and you would have stopped it just before it started there. So you're on that green candle there. You see there, you would have stopped it once you saw a green candle start breaking to the upside, moving towards those moving averages. Now in terms of the overall returns, had you let this run, and I'm not suggesting you let it run and have a drawdown, you stop it before it enters the moving average zone to avoid getting a drawdown or a hit to your drawdown. But in this case, the overall results were $12,000 for the shorts on the average down approach, $3,900 on the stop loss, and $4,300 on the long program since that date range there, to $890 as I said. Here are the rules for the average down and stop loss approach. So again, if you got value out of the video, hit that like and subscribe button. Thanks for watching, and I'll see you in a future video.